Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. There we go. And let's get, where are we at here? Let's get the charts up on the screen. It is Monday, so TGIM, thank goodness it's Monday. That's the way I look at it. Let's see if the chat line's working too. And let's see what else we got here. Let's go like this. Let's put the trading platform up there. There we are. Put that down there. And let's get that dollar index in there too. We've moved over to the December dollar index. Let's see if we can get this thing on here. I wonder, I was pushing on a dollar index and I was a little confused. It didn't seem to want to give it to me. So then this morning when I started pushing harder, I started realizing that they've actually stopped the September contract and are into the December and March contracts now on a dollar index. So let me reset that at the same time. And skip that ad. I see no questions at the moment. That's fine. I'd like to try to get that in there. Thank you, right there. And we go like this. And let's see where we're at here. Let's open that. The Django. And then there. And then view. Tickers. See change. No. Editing. And another. What if I do that? Not there. I guess add. No. Just getting used to that whole new platform. Is it a view? Change? No, that's not it. Oh, I'm not signed in. That's why it's being a little antsy. Let's try that again. There we are. Let's see. I think confirm. Let's just close that and start it over again. Anyhow, you can see the dollar index on one. Let's get the dollar index on another. Right there. Let's see DXZ now. And you can see dollar index holding up relatively firm in a daily buy for the last few days. You know, it's been on that weekly buy since the 101, basically the 102 area. You know, since this area here, and it's climbed up. I guess it's the anticipation of what is it? Hey, Robin, the anticipation of those 2/4 point increases. I'm assuming. You know, there's a lot of noise out there. You know, we talk about it all the time here. There is a lot of noise, and it's awful hard to try to separate them at times. You know. What was that? Let me just go back to that again. Do I have to sign in maybe? Let's see. So if I go to add, I go here, I go there, ticker. Let's just put the ticker in there and see what happens. So it's was it DXZ 23, and then DX23.NYB. NYB. Okay. Save. There we are. Well, now it might even open the doorway for me to remove this one. Let's remove that. Oop. Let's do this too and fix that. And Z. Save. There we are for that. And then, yep, that does that. Now let me go to here. Let's see if I can remove the old one at the same time. And then, as I'm doing that, let's talk about the dollar index a little bit more. Like I said, there's a lot of noise or a lot of cross current or a lot of involvement. You can use any one of those ways to describe. We know that they want to raise interest rates 1/4 point a couple more times. Inflation is lifting its head. I think we used as a title. I know we used as a title on Friday that money managers are just as let's see, delete. There we are. Got rid of that. Yes, I'm sure. And money managers are just as out of whack as politicians are in the United States at this point. We are at a point now where money managers, they know that the interest rates want to go up. They know that we're heading towards like a stagflation, and at the same time, there it is. That's not kicking up. Let's see if this one will do it. That's there. Why isn't the D? Is it DX or DZ? Did I mess that up? No, it's DX. Okay, DXZ23. That makes sense to me. Why is it not giving it to? Oh, there it is. Okay, there. Okay, now it's loaded. And so there's the dollar index. Let's show you the second dollar index on the Chicago new platform that we're working on. It's the beta test, and you can see right there that's got that same situation. Where's that mouse? Right there. It's just steadily climbing. When we thought it would stall out in the 103.5, 104 area, here we are at the 105 area, and that's because we have this it's called a dichotomy. It's going in two different directions. What you have is the Federal Reserve taking the open markets a certain way with increasing interest rates, not adding as much liquidity. You have the government stalling out on paying and lending money to small businesses that are normally lent money. And then at the same time, you have money managers, okay, that are plowing money into them. Now, that may be the classic old-fashioned market in the end result. In other words, they know that the first two things are not going to survive. The Federal Reserve's actions, in other words, interest rates are going to stop climbing. It'll start to go sideways and then start to move down. And then the second one is they know that sooner or later the IRS will start, the Internal Revenue Service will start lending that money again to small businesses that's owed that money, no less. They want their money back, in essence. And so we have a lot of strange events. In other words, the markets always look out. They always look out like 3, 6, 9 months. We had the perfect example here. I'm not trying to pat myself on the back, but when Janos asked for us to take a look at some stocks and what stocks to look at over a 3 to 6 month period or 6 month to 9 month period, I came up with 4 of them, and within 24 hours, one of them was bid up over 50% in value. 50%. U.S. Steel went from, I think it was like the 12s to the 20s, or the 20s to the 30s, one or the other. It jumped $11. Someone walked in and tried to buy it. And that's the classic old Wall Street, where they start to anticipate what's going to happen 6 to 8 months down the road, and they start to invest. They put their money where their mouth is, basically. And so that happened, which was really funny that it happened with me making the recommendation of, here's a good 4 solid companies, and one of them got bid up within 24 hours to over 50% as a takeover, no less. So it wasn't as much as me being brilliant. It was me reflecting and explaining what markets do, and these are the type of stocks they're going to go after over the next couple weeks and months. And they just happen to do it the next 24 hours. And so it's not like, oh, wow, Doc is so smart that he knows that was going to go exploding 50%. No. I just knew that money is getting comfortable with the idea that 6 to 8 months down the road, this economy is going to be totally different than what we have right now. And because of that, they started reaching for it. And what I mean by reaching for it, they started taking money out of their pockets, and they started to, starting to buy stuff. And I was even reminding, I think I was suggesting that what I have been hearing, or what I had been hearing back then 3 and 4 weeks ago, was now is time to invest in risky assets. In other words, take the risk, take the hit, buy it knowing that you're dollar cost averaging, and you're going to start moving into the plus side of buying over time. Those products go up, plus side up, minus side down. That's it. So anyway, that is that, and that's why we're looking at the dollar index there on our new platform right there. Let's see if Jeff had fixed it. I think that's a 17, so that's good. That's a lot better than. No, that's the weekly. Let's see what the daily says there. Yeah, the daily is doing the same thing. So he's adjusted that for us, and he's supposed to add more weeks to the weekly. But that's all right. The calendar looks a lot better. At least it's representing today, or at least yesterday or last night. And this is a futures contract, so that probably makes more sense that it should be last night, not today. And no, just instead of 18, it's 17. Because they do start trading this thing on Sunday evenings. So anyhow, that's where we are. That's where the markets are at the moment, and that's where we see this action going on. And we're just going to keep on watching it do its thing. I mean, that's really what it comes down to. It's trying to basically get its game together so that it starts to do that. It starts to set that stuff up so that money will start to move even more. They will start to try to buy low, dollar cost average in, and try to get rolling along. That's pretty much the name of the game. So, okay, now let's go check the chat line again and make sure I'm not dissing anybody and skipping anybody. There it is right there. Okay. All right. So from there, we go over to. Might as well just jump over to the euro at this point. He said he was going to try to get I'm going to put the euro up there, but he said he was going to try to get. And I guess I could probably add the euro future, but we're more of a spot type of webinar. We always look at the spot, so I'm not going to explore that at the moment. I mean, I'm sure we could come up with the futures contract on this, and that would be okay. But I don't want to start something that not almost nobody trades the futures here when it comes on to currencies. Everybody trades the spot, so we'll just leave that up there until he gets that adjusted. And you can see there, the weekly is fine. It has that pressure on it, and you can see the downwardly slope of the daily. Notice the daily is not really reflecting the daily algorithm yet. We get that when we look at some products are collecting the data and some are not because it's not getting fed to them. And so whereas when we go to like the British pound, like right here, you can see it's right there and it's happening. And you can see the date is correct now again, and so forth. So it's just a matter of time. Let's just slide back to the euro real quick. There's the euro. And you can see it's a little bit higher today than it was yesterday. Let's put it up on J4X. And we'll also take a look at it on our other platform that we've been using for years here now that we're building the new one to replace. And oh yeah, let's get it up on J4X. There it is. And there's the euro on a weekly basis, and it's been sliding down just like it is right here. See it, all that sliding down. It's in a weekly sell, and then we go over and look at it on a daily basis, like so, and you see that pressure on it again. It's trying to act weak, and then when we go over to the other platform of ours that we're building, that we're trying to replace. There we are. You see it's just flattish up a little bit with a little green trying, 3 days in a sell there. Let's put a line in there for you. There it is right there. You can see the the strength of it. That pressure is on, and it's not willing to let go. And that's what it really comes down to, is that the markets. Let's fix that weekly too. Get rid of that line in there. You see all that pressure. Now again, we really, I think we've even Fibonacci'd this. Let's tighten it up so you can see that. We put it into the Fibonacci sequence to see if we could see any characteristics. It looks like it wants to go after this low in here, but I'm not really confident that this is a major change in the market, to me, it's more of what we like to call a dead cat bounce. I kind of think it wants what it's trying to really tell us is that the product, in this case here, the pairs trades against the dollar in every which way at this point in time, is trying to tell us that it's just trying to tell us that that's the nature of it all at this point. That's what it's trying to tell us. And so, as long as this keeps on going on like that, then we're going to accept it like that. That's what it really comes down to. And so, we'll just kind of, deal with it as it goes. Nothing more than that. And I guess that's the gist of it all. Is these markets are not interested in giving up when it comes to the fact that that it looks like interest rates are rising, and it's just refusing to do anything about that. In other words, they are not going to surrender that idea. They know that the 2/4 points are coming, and so pairs trades are acting sideways to down, more down, of course, right now. And then what will happen in the end is that the markets will, I guess, accept it all. And then what happens? Money goes and says, okay, we're going to take more risk, and that's why money managers have been saying that on the side. I've been seeing that, and I've been telling everybody here that they're willing to take that risk for the time being. In other words, dollar cost average their way into the whole situation, and that's really what it comes down to. Let's see. And if that's the way it goes, that's the way it goes, And we just have to be appreciative of it and acceptance of it. That's it. Just the name of the game. All right. So from there, let's get back to the chat line again. What else can we say about that is let's just go to the cable, see what the cable is up to, and we will, basically see what the flavor of what's going on, and we'll go right there. We'll put it up on J4X. Where is it at? Right. Where is it at? Right. Dollar cable. It's cable dollar, really. That's what it is. Right there. You can see that pressure on the way down. You can see it over here. And we showed you before, this one is collecting the data correctly. You see that pressure on it. And, it's just, the market doesn't want to give up. It knows. It knows that the money, it knows money's going to want to be involved. It knows it. And if it didn't know it, it would, it wouldn't do this. That's pretty much what it comes down to. But they do know it. They know that the whole situation is, what is that right there? Okay, yeah, there you go. So, what else can we say? But we're going to have to, I guess you could say, is get used to the idea for like the next few months. Is that, and like the elections are going to be, like I said, the elections are coming around the corner now. We're heading for October. We're only 3 months away. January. So, November and December and January. It's 3 months away. So we're 3.5 months away from presidential primary elections. So, yeah. Just when you thought that things were going to get normal on some level, we're going to get even crazier. That's even worse out of it all. Is we're going to get crazier. That's exactly how it's playing out. Yep. I don't know how else to say it. It's definitely weird, that's for sure. Okay. From there, we jump over to the Swiss. And we're going to put the Swiss up over on J4X. And we'll put it, let's see, where's it at? Right there. That's dollar Swiss. That's CAD Swiss. We want dollar Swiss. Right there. There we go. All right. same situation going on there. You can see it's losing against the dollar, and it just doesn't seem to want to stop. It just keeps on doing that stuff. So at this point in time, let's put it up over here too. There's right there, and you can see that action climbing, climbing, and climbing, and not letting go. And then from there, let's just double check this right here. Let's go over to okay. There we are. Now from there, we slide over to the Japanese yen. Still pushing up on it. Look at it. You know, it's interesting how it has really turned that into a ceiling, but unfortunately it's starting to look like a reverse head and shoulders when it comes to the Japanese yen. There looks like more and more pressure just keeps on evolving on it. And I'm not really sure if we're going to see much of a change from that at this point. It just doesn't seem to want to let go of that either. It's just sitting there. It's hesitating back and forth. You can see it on, let's put it up on Chicago Quant. Right there. You see the same thing. See that big, long, flattish type of characteristic. Let's tighten it up a little bit to give you more flavor of it, like that. It is not, it is just not letting go. It's going to be very interesting because we have seen how the government, I guess you could say, there has said that they don't know what they're doing at this point about what the future looks like. We've seen where the pairs trade, or the carry trade, the carry trade is starting to diminish. It's one way for China. That's the way Japan borrows money, through the carry trade. So the interest rate being as high as it is for them, which is unique. And I mean, in other words, they barely, they still don't pay on. I think it's not 90-day bonds. I think there's still a minus. You have to, if you want to buy a Japanese government bond for 90 days, you pay them. They don't pay you interest. There you are. There you go. So from there, I guess what we'll do now is we will slip over to, let's check it out. Oh, and I'm just going to look on our other platform if it's worth showing it to you at the moment or not. Nope, it's not data feeding it. Just has that same situation on the weekly. I'll just show you that. There it is. Just that weekly thing again going on. Lots of strength, just like it is over here. Same old situation. Now, let's see what else we got going on here. I guess you could say we have Hunter Biden is suing the IRS for disclosing the fact of another delay tactic. What a crazy time we live in. No wonder the markets are so, I guess, Giannis made it very clear, the head analyst here in Rega, that basically, looked at it a long time ago now. It's years, where fundamentals sometimes just don't have any relationship to reality. That's the really weird part out of it all. The reality and the fundamentals have gone in two different directions. And it's just like I said, with what's going on where's my chat line? Why am I not seeing my chat line? Let's try that again. Let me load my chat line up again. The fundamentals have gotten to a point now where they have a small effect, but they don't have the effect that they used to have. That's the weirder part about it all. All right, now from there we go. Yeah, see, that's showing that. Why is it not showing? That's showing that. Why am I not? Oh, I see why I'm not seeing. I'm lost my chat line. There it is. Okay, the chat line had disappeared on me, so I was like, "Whoa, where's my chat line?" So the last thing I have is Robin saying hello. That's good. All right, that's good. I don't want to. I don't want to miss answering questions if there's questions to be asked. That's what it really comes down to. All right, and then from the where's that? The yen we're on now. So let's slip over to the yen, to the Turkish lira. We'll put that up on J4X first. Lira, Turkish lira, lira, or the euro, Turkish lira. There it is. It'll jump out right there. There we go. And you can see there, it's really sidelined itself into some type of tightening triangle. We've talked about this before. Unfortunately, we think this is just the beginning of another move that will slowly push it up again. Hopefully not, but we went into the weekly buy, as you can see right there. And let me just put it in here. Yeah, I mean, with it going into the weekly buy last week, that only makes me more concerned, not less concerned. And you can see here, same situation. Let's go to, I guess it's doing it this week here. So both of our platforms now are trying to push up. If we go look at the weekly here on J4X, it's very close. We got the green, the fast blue at 59.3 basically, and we have this slow at 56. So we've got part of our indice telling us that it's trying to go up. We're just waiting for the Hinky Ashki to turn green. That's all it is at this point. And so that's definitely something to be concerned about, in the sense of that pressure is on it at the same time. All right, now from there, let's see. Let's go see what's next. From there, we drift over to, put the daily back up, and we go to the South African Rand. We start to look at the little brick currencies. Nothing too major at the moment. The best brick of all we have here now is not basically the number one brick in the world is the South African Rand. So let's get that up on the screen. South African Rand, ZAR, right there. There it is. And there's that daily. It's lifting up again, and when that's lifting up, usually that's a sign of pressure on gold. Let's see what it looks like on over here. We're going to jump right to gold. There it is. There. It's just up a little bit in the currency. Now let's go over to the gold. And there is gold. Gold is flat, nothing major. It popped up on Friday. We climbed into the weekly buy. Kind of surprising on some level, thinking that maybe the South African Rand will, head back down again. Maybe it'll make another turn. They're in the middle of, nobody is exempt. In other words, no one's getting away from the fact that there's a lot of political confusion on the planet right now, in the political arena and in the financial arena. Not counting the fact there's a war in Europe, in the largest European nation. There's a war going on at the moment. So talk about not accepting reality. They're upside down also. Now here's South African Rand. It's giving us some data on our new platform. You can see there, it's trying to lift up again, just like we're doing right here. And at the same time, you see that weekly just still consistently trying to press its way up, which is not a bullish sign. I mean, this is gold, so it's trying to lift. Now, up until all that political turmoil a year, basically, that's almost a year now, in South Africa. That would have been a recipe with the South African rand. Let's go right over again to J4X. South African rand's trading at 1905. And if that political turmoil hadn't started down there with the president of South Africa 9-10 months ago, we would be trading in the 14s or 13s. And gold has reflected that. They've done more selling in it than they have done buying. It follows it has a habit of following gold very well, or vice versa. It actually leads gold. That was what was nice about following the South African rand. It actually led gold. And so we could see it down here in the States in the morning and know that if the South African rand was gaining against the dollar, in other words, heading down, there was a really high odds, 9 out of 10 times, it would be doing the same thing in the afternoon here in the States. We would see the gold, starting to, make its nice move, But unfortunately, that situation has twisted and turned, let's say. So. All right. From there, we slide over to what we do nowadays is we used to go on and do other things. Instead, we just do the two last currencies. We look at the South African rand, and at the same time, we go look at silver and copper and platinum and all like that in this particular section of the webinar. But remember, traders, if you have a question, we will give you an answer. So in other words, don't run away in the sense that if you think that you have to listen to me, all you have to do is type into the chat line you're interested in looking at something. It doesn't matter if it's British pound or if it's copper or if it's the Australian dollar or whatever. If you want to see it, if it's Amazon stock, Google, Apple, whatever you want to see, we'll go right to it right now, because I'm very happy always to what we refer to in American football as bootleg. In other words, it means that you're going to go switch directions and do something people don't expect. In this case here, we're asking you to pick the thing that people don't expect. And that is obviously going to take a look at some other product that we are not looking at the moment. And without you asking the question, I just go through a rhythm every day just to stay consistent. And a lot of experienced people of this webinar know that Doc will jump right into the subject you're interested in looking at, and have no problem doing that, and then answering it, and then going to jumping back into the other direction again. So that's the magic of it all. That is the magic of it all. All right. Now, from there, let's go take a look at silver. And I'll check the chat line just to make sure no one has said, hey, Doc, what about X? Nope, nothing on the chat line. So, let's go take a look at X. And there's silver. See, silver was flirting this morning with the weekly buy, but it seems to have stalled out again, and so it's stuck in that situation. Gold was lagging silver for a while. Now we have silver lagging gold. It's just going back and forth, and we know this is the time of the year where things get exciting for the metals market. And as you can see here in the gold again, as we go back to it, it's jumped into the weekly buy last week and it's just hanging out there. So that's not too bad. I mean, but unfortunately, we're looking at a South African rand, as you see up on J4X. So the thing is trading in the 19s. I mean, it's just barely through the 19, but still at the 19. It should be much lower. So that's what we usually refer to that in trading as the haircut. In this case here, they've been asking for the president of South Africa to resign, and he's said no, not interested, and so they don't have much of a choice at this point. All right, from there we'll take a look at copper, and there's the copper. As you can see there, copper is acting very firm. It tried to get into the sell on Friday and failed. It did jump into the weekly buy right there, and let's see what we can do about putting it up on the new platform at the same time. HG. There's NG. And there's NQ, HG. Where's HG hiding? There it is right there. And we need to fix that one because that says the September contract. And we need to get rid of that. So let's go and open the door to that at the same time. So I'm going to minimize this so I might not see any questions that you give me at the moment. And let's go to there, trading, and let's fix that chart. There it is like that. Nope, that's not it. Trading. Where are you? Not that. Where's Django? Maybe there it is. No, that's doing it too. Not there, not there. I had it up there earlier, so let's just go into history and see if I can get it that way. Oh, there it is. Perfect. And let's fix that one now. Let's see, HG, 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 HG. Oh, there's an HGF too. Let's see if we can get that up there. Where's HGF at? That's what I was hoping for, and I'll delete the other one later. HGF. HGF. There it is right there. There we go. As you can see, oh, now that's in a cell, so maybe we need to fix the other one instead because we're looking for we're now looking at the December copper nowadays. So let's find the HG September and remove that and put the December in there. HG. I'm gonna get closer, and I'll keep an eye on the chat line in case someone says, "Hey, we're bored with this and we want to." Let's see, HG, HG, HG. No. So far, I did see it at one point and I missed it. Not there. Not there. Should have jumped on it when I saw it. Always trying to be accommodating, I am. Let's just add one. The heck with it. I'm not going to dance. Just hit add. And we'll clean up the platform later on. So we're looking at HGZ 23 dot HG23. Let's see, where's it at? I did see it, so we will find it. There it is. CMX dot CMX. There we are. Save. Well, at least that we know that will be there to be had. So minimize that. Go back to that. Nothing on chat line. Let's go to there and let's find this. I'm going to go back to home. Refresh the page like so. Let's give the little circly thing to do the circly thing. And here it is. Now we'll see what's going on there. Ah, that's better. There it is. That makes sense to me. Now you can see it here. You can see it. It's been days and days and by, just like it is right there. Days and days and by. It's in a weekly buy for 1 week now. It's starting a second week here. And down below we have same situation. Went into a weekly buy last week and adding a second week on now in a buy. So that pressure is on the copper complex. Now let's jump over to, where is that? Right here. We look at platinum. It's the October contract, which is still the lead month. It's in a weekly buy from last week, and it's still also showing life on the upside there. There we are. All right, so that's pretty much the metals complex. What we do now is we slip over to the Canadian dollar, and we look at the energy complex, and everybody has a good idea what's going on there. Dollar CAD right there. Now dollar CAD is the last couple days. Look at that. That's the daily. It's been dropping for a change. It's not, oil. When oil goes up in value, normally the Canadian dollar sells off. But for some reason, the Canadian dollar has not been following that pattern very well. So we just show the same thing and we just go through the energies. But it has been somewhat of a confusing affair. Obviously, there's more influence of the Canadians' financial influence than than anything else at this point. Okay. Let's see, where's that? Right there and there and there. Okay. All right, now let's get that up on the screen. Cool. And we're going to show you crude oil here. And we've moved the front month crude oil over to November now. So let's just show you on the old platform. There it is right there. And you can see it's trading over the 90s. At this point, it's 90.85. It's been in a weekly buy for now going on a fourth week. And it does not care either. It's basically just staying consistently moving in that direction and not letting go. We just it just doesn't let go. It's just all part of the natural pattern at this point. Let's see what else is there. Let's go over to right here. It's like I said, showed you there. There's the it climbing. Let me put it up on. Where's crude at on this one? Let's find. I think I have the November contract on here already, so we don't have to do any song and dance to get you there. Let's see, crude oil, crude oil. I know I put a bunch of crudes on there at one point. There's the October. Let's see what that is right there. Yeah, and as you can see here on our new platform right there, it's just been it's been even stronger. It never even reflected that the sell off here, and you can see the daily's been in a buy for a while here. It's even more accurate than our older platform. It didn't get didn't get that sell. It stayed in the weekly buy, and obviously it was accurate to do so. And the daily at the same time was smart enough to push into the sell, giving you that warning here that the pressure was coming. And even if you bought it on the math, it would have been a win. And it goes back into the sell here, and a little sloppiness, and then back into the buy again. And even if you gave up a few dollars here, look at how much you've made from it. So that's why we're very happy with our new platform. We're getting there, and it's getting more developed. And we've offered beta testing for people that want to be a beta tester. They can be a beta tester. It's no problem at all. Let's see if I can put it up on the screen there again, like that. There it is right there. You can see this is currently under beta testing, and if you're interested, just contact Robin, and he will set you up to be a beta tester for a couple months. See how it works until it's all running right. All right, now from there, let's see. Where do we go from there? Let's go to, there we are. And that is the name of the game. right from there we jump over to. Let's take a look at the back month. We're looking at. We've moved to January. Crude trading at 88.55 with it trading at 90. Was it 90.55? So it's a $2 swing between November and January. 91 dollar and a half, $2 swing almost. See, so 88.55. That's $1.45. Is that $2.45? 88. Let's just go look at that. Yeah. So there's the front month now. It's at 91, basically $91. And the back month in January is trading at 88.55. So that's a dollar. That's $2.57. Is that right? $2 premium? $2 would be $90.50. Yeah, $2.50 premium. So there is some real desperation to get their hands on front month oil with a $2.50 premium going on it now. $2.50, not $1.50. $2.50 premium. So you see there the Jan contract trading at 88.58 as we speak, and at the same time, you can't see that right now. There we go. At 88, what's that? 88.63, and then when we jump back to the front month contract, which is we're using the November contract now, it's trading at 91.15. 91.15. So boy, are they hungry for that fuel. They need it. They need to be able to refine it. They need to be able to deliver it. People need it for their machines. The whole bit. It's not running away. Let's put it that way. As we take a sip of our tea again. All right, now, what can we do from here? Let's see. Let's jump over to natural gas. Right there. Natural gas tried to get into a buy last week and failed at it. The fast is still moving up in it. You can see that even the slow, even the slow is trying to lift up in it. Not doing too good a job, of course, but it's trying. Let's put it that way. And then, and then let's put it up on J4X. Oh, let's put Brent up there too. And there's Brent. Brent is marching up. Where's Brent trading now? Is that right? Almost $95 now. Brent is heading for that century mark. Excuse me. Sorry about that. Got something in my throat. Let's put a piece of gum in my mouth. That'll calm me down. There we are. And then, let's see what we got here. So we got natural gas up on the screen. You can see that. You see how it's been a daily buy. And now what is that? Is that right? Oh, no, it's crude oil. Okay. So let's put natural gas up on the same thing. NG. There's NQ. There's an NG. I can see. Oh, look at that! It's trying to battle its way into the buy today. And what else can we say about that? And it's in that daily sell for the last 2 days, right there, just like we are here. Matter of fact, it went into the daily sell on Thursday. And let's see, which contract are we looking at here, just to double check. I wonder what NGF is. Let's see what NGF is, just double checking that. Because we're looking at the November contract. I wonder if they're still looking at the October contract. I'm going to take a quick peek and see what the NGF is. NG. October. So the we're looking at the October contract on our platform. We'll have to switch that out. But I'm not going to torture you all with that. We are going to just keep on marching along. Oh, there we go. We got somebody talking. Terra SS. Hey, simple question. How can we edit a source code of a built-in indicator to make it a custom one? Good question. When I did the contest, there was an opportunity to do that. I would say, call the technical side, or text the technical side at Dukascopy and see if they allow you to do that. They've talked about, I don't think they do. You can change the parameters. So in other words, when you're looking at this platform here, let's just show you what I'm talking about here. So in other words, you go in and you look at the different indicators. Add an indicator, say, and you go and you find an indicator, and then you click on it, and then, or let's see, where is it? Let's try one of these, like a stochastic situation. And I guess you would click on the study itself, and it gives you opportunities to change different characteristics. And you want to be able to do what? You want to edit a source code. The code itself, I don't think you can do the code itself, but they do have variables you can change. Does that make any sense to you? So in other words, if you're looking at a moving average, instead of being a 9, you can, like, here's a momentum one. There's a lot of momentum ones there, but imagine if you're dealing with like DMI, and then you go to edit it. You can probably get in and change. See how it says 14 there? You can probably move it down to 12 or whatever. See, like right there. See how it's moving up and down on the screen? On the you can, as I push that, it changes that, but you're not able to change the source code itself. I would think that they would hold that back, because then if you were able to, I don't know if it would probably have to make it like an individual thing, and so that would really mess things up. In other words, if you didn't, in other words, everybody would have to follow your source code, not the generic one from Dukascopy itself. Does that make any sense to you? I hope so. I hope that makes sense to you. So, what else we got to say about any of that? I guess that's about it for the time being. Now, let's jump over to, I hope that answered your question too. Let's just double check. Yeah, but in the navigator menu button, our bottom panel, there's the function to code a new line indicator, but well, thanks. Yeah, Giannis is not around at the moment, but I would talk to the technical analysis people. Giannis is going to be gone for like another week and a half, and then what we can do is we can ask him about that. But I think you can change the parameters, but not the source code itself. And I'd be surprised if you could change the source code. There'd be no reason to let you do it, because because I don't think it's independent. You're still tying into the Dukascopy, the J4X platform, and that would kind of change everybody else's parameters at the same time. So, all right, and then from there, where do we go from there? That's Nat Gaz. We're pretty much at the end of our webinar here. So, what we'll do is we will catch you all tomorrow at the same time, same channel. So, we always stop about 5 minutes before the hour, so I can get ready for the New York market. Yeah, I stay tuned. So thanks. The same for reply. Cool. All right. This is Doc from North America. We will catch you all tomorrow, same time, same channel. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders, and I will send over a title for this. So, arrivederci. Hey. I'm not sure. He just said he had to dive out. He was not very clear about it. And matter of fact, he called me or texted me and didn't really say anything at all, which is kind of odd for him. Usually he'll say he's up to this or that or doing something or so.